Most people think banks catch fraud after it happens. Someone reports it, the bank investigates, and then action is taken. That's outdated. In reality, modern banks are trying to stop fraud while it's happening, because once money is gone, recovery is difficult. So the real challenge is not detection after the fact, it's identifying suspicious activity in real time. And that's where data-driven fraud detection comes in. Think about this in a simple way. You're using your card in your home city and suddenly there's a transaction from another country within minutes. Or you usually spend small amounts and suddenly there's a large, unusual purchase. These are not just random events, they're signals. Banks track patterns in your behavior and compare every new transaction against those patterns. If something looks unusual, the system flags it instantly. This approach is built on statistical and probabilistic thinking developed over decades. Early foundations in pattern recognition and anomaly detection evolved into modern systems that can process millions of transactions per second. Instead of fixed rules, banks now use models that learn from historical data, understanding what normal looks like so they can detect what doesn't fit. In practical terms, fraud detection systems analyze multiple factors at once: transaction amount, location, time, frequency, device used, and even behavioral patterns. A single factor might not mean much, but combined, they create a risk score. If the score crosses a certain threshold, the transaction is flagged, blocked, or sent for verification. This entire process happens in seconds, often before you even realize something is wrong. Banks and financial institutions like HSBC and Visa rely heavily on these systems. With millions of transactions happening every day, manual monitoring is impossible. Data analytics and machine learning allow them to scale this process, catching patterns that humans would miss. But here's the difficult part. Fraud detection is not just about catching fraud, it's about avoiding false alarms. If the system is too strict, it blocks legitimate transactions and frustrates customers. If it's too lenient, fraud slips through. So the system must constantly balance sensitivity and accuracy. That's why these models are continuously updated and refined. Now with AI, fraud detection is becoming even more advanced. Systems can learn from new fraud patterns, adapt to changing tactics, and respond faster than ever. But fraudsters are also evolving, finding new ways to bypass detection. It's a constant battle, data versus deception. At the Learning Studio, the goal isn't just to explain systems, it's to show how they operate under real pressure. Because once you understand fraud detection, you stop seeing banking as simple transactions and start seeing it as a complex system designed to protect against risk in real time. And that's when you begin to understand how critical data really is in keeping these systems secure.